Hello everyone. Today in this video we are going to see the asset related certification related questions in detail with explanations. Which system components are directly integrated with asset accounting? So there are three correct answers. So we all know that bank account is not at all related to asset accounting. Investment management is, purchasing is, and plant maintenance is, not the quality management. So, investment management is tightly integrated, especially with assets under construction. Purchasing is integrated with asset accounting already from the purchase requisition phase, and the asset is a required field on the purchase order for purchase acquisition. Plant maintenance integrates through the equipment master record connection to the fixed asset master. Bank account management isn't directly integrated with fixed assets, and the same is true with quality management, which integrates with materials management. So the correct answers are B, C, and D. What is true for assigning chart of depreciation to company codes? What is true for assigning chart of depreciation to company codes? All company codes of a single country must be assigned to the same chart of depreciation? No. Each company code can be assigned to a different chart of depreciation. Yes. You assign company codes only to the chart of depreciation delivered by SAP? No. A company with company codes in multiple countries can use a single chart of depreciation for all. A company with company codes in multiple countries can use a single chart of depreciation for all. It is actually, there are some laws for each and every particular country, so it might not be possible to use the same chart of depreciation for all the company codes which are related to different countries. There is no limitation on the number of charts of depreciation created for a country. You assign a chart of depreciation to each company code, and again there is no rule to assign the same one to company codes belonging to the same country. You can use a standard chart of depreciation as delivered by SAP, but if you want to make modifications, it is advised that you copy it and then modify the new chart. Asset accounting has a very different accounting rules in different countries, so you wouldn't use the same chart of depreciation across country borders even if things looks the same to begin with. Laws and regulations change all the time, and you never knew when a country will impose a rule incompatible with other countries. The next one is true or false question. A single depreciation area can post to multiple ledgers. Yes, true. This is true, but is a kind of tricky question. You can assign an accounting principle to the depreciation area. The accounting principle is assigned to a ledger group. The ledger group can have multiple ledgers assigned, so many ledgers can be updated by a depreciation area. So we assign the accounting principle to the depreciation area. In turn, we assign that accounting principle to the ledger group. In that ledger group, there is a chance of having multiple ledgers. So many ledgers can be updated by the depreciation area. So this is the link. What is true for real depreciation areas? They are set to always post to the general ledger. Each can be assigned multiple currency types. You can post transactions to them independently. They can have values calculated from combining other depreciation area values. So real depreciation areas are always set to post to the general ledger. Each can be assigned multiple currency types. You can post transactions to them independently. They can have values calculated from combining other depreciation area values. In asset accounting transactions that aren't integrated with accounts payable or accounts receivable, you can choose to post them to specific depreciation areas. In addition, if a depreciation area isn't valid for an individual asset, you can deactivate it. The asset values then won't be updated for the deactivated area even for external transactions. An expense or loss account is debited to balance the technical clearing account in such cases. A real depreciation area does not have to post to the general ledger. Each area is assigned a specific currency type. Calculating values from other areas is the exact reason for having derived, not real depreciation areas. So this is the explanation for all the answers why the only C option is the correct or perfect option for this real depreciation areas. So the next one, two assets belonging to the same company code post depreciation to different general ledger accounts. What does this mean for the assets? So if it is posting depreciation to two different general ledger accounts, the account determination for that assets are different and they belongs to different asset classes. So the definite obvious answer here is that the assets have different account determinations. This also means the assets belong to different asset classes because an asset class is assigned to a single account determination. Although unlikely, the acquisition and production costs account could be the same between separate account determinations. So although unlikely, the acquisition and production cost account could be the same between the separate account determinations, the cost center has no bearing on the selected accounts. So the perfect combination is A and B. So true or false question, two assets in the same asset class belonging to different company codes but with the same chart of depreciation can post to different accounts. So these two assets are in the same asset class but the Company codes are different, but the chart of depreciation is same, can post to different accounts. Here, as with the certification questions, you need to read the question through and find the essence of the information given. There is almost no chance that some piece of information is given to distract. Here, the key is that the company codes can have different chart of accounts assigned. So maybe chart of depreciations are same, but for different company code, the chart of depreciation, chart of accounts might be different, because the accounts in the account determination are defined per chart of accounts. The two assets could post to separate accounts. How can you default a value for the cost center in the entire asset class for buildings? So how can you default a value for the cost center in the entire asset class for buildings? So by using asset subnumbers, by changing the assigned screen layout, by changing the assigned tab layout, by entering it in the default account assignments for the general ledger account. It is in the screen layout. In the screen layout, you can define that a field can be set on the asset class level. You can do the same for the subnumbers, but another main asset in the asset class wouldn't be limited. The tab layout only affects the positioning of the tabs. The cost center assigned to the asset can't be affected by a rule in the default account assignments. So for each and every option they have explained here. So but the correct answer is in the screen layout. There is a field where we can set the default values set on the asset class level. Which of the options are types of user fields? There are two correct answers. Which are the options or types of user fields? User fields are evaluation group and asset super number. Group asset and serial number are different. This is a straightforward knowledge question. You usually answer these by a combination of knowing part of the right answer and dismissing some of the wrong answers. The evaluation groups and asset super numbers can be maintained in customizing and assigned to assets to cover customer requirements for extra fields and groupings. The group asset is in depreciation characteristic. The serial number is a standard field that often ties in with equipment from plant maintenance. So the ninth question, when you copy an asset, the asset text is copied as well. How can you avoid this? Again, here the same option. Everything we can change it in the screen layout rule. You define which fields get carried over when an asset is used for reference in the screen layout. This isn't maintained in the tab layout or the asset class. The dummy reference asset isn't a good solution. It is more of a hack workaround, and you wouldn't ever do something like this. Nevertheless, the option probably wouldn't appear in the certification exam because ambiguous answers are avoided. For which kind of asset is the asset main text always pre-filled? For which kind of asset is the asset main text always pre-filled? For asset subnumbers. The asset subnumbers inherit the asset main text from the main asset number, and this can't be changed. You execute a report based on the location and are missing an asset. What might have happened? The asset have been fully depreciated. The asset was sold to a customer. The equipment assigned to the asset was moved. The asset was partially scrapped. There are two chances: the asset was sold to a customer or it might be moved. When an asset is integrated with the equipment, changes in the equipment can be configured to update the asset. An asset sold will no longer show up in the company code reports. Fully depreciated assets show up in the reports because they are still active in the company, and partial scrapping would not deactivate the asset either. So, true or false question: the document type maintained in the asset transaction type is proposed but can be changed manually during posting. So the document type maintained in the asset transaction type is proposed but can be changed manually during posting. True. You do maintain a default document type for posting in the asset transaction type. This is defaulted in certain transactions when you don't enter a separate one manually. An example in which this can be changed is the integrated asset acquisition posting with supplier, in which document type KR is used instead of transaction type 100 with default of AA. Which transactions lead to asset capitalization? So there are three correct answers. Which transactions lead to asset capitalization? So purchase order in purchasing, valuated goods receipt, assets under construction settlement, intra-company transfer. So valuated goods receipt, yes. Assets under construction settlement, yes. And intra-company transfer, yes. So purchase order in purchasing, just purchase order will not make the asset as a capitalized, and non-valuated goods receipt, that doesn't make it. So BCD, an asset is capitalized when processing a valuated goods receipt. The invoice is used for confirmation or adjustment of the amount. In contrast, with a non-valuated goods receipt, the asset will be capitalized from the invoice entry. When you settle the line items posted to an asset under construction to the final assets, those are capitalized. When you post an intra-company asset transfer, the asset is capitalized on the asset value date. The purchase order doesn't capitalize an asset. That happens either on goods receipt for a valuated goods receipt or during invoicing. Okay. So these are the explanations for the options given to this particular question. So true or false? In both the ledger and account approaches, the technical clearing account is posted to by all accounting principle specific documents. In both the ledger and account approaches, the technical clearing account is posted to by all accounting principle specific documents. False. In account approach, only one accounting principle specific document posts to the technical clearing account. The rest of the documents post to a different clearing account. If each document posted multiple times to the same account, the account would end up with a balance. So true or false question. When posting an integrated asset sale to a customer, you enter a debit for the customer with posting key 01 and credit for the asset with posting key 75. When posting an integrated asset sale to a customer, you enter a debit for the customer with posting key 01 and credit for the asset with posting key 75. It is false. On the credit side, you must enter the revenue account for an asset sale. This is a special account with the field status group for asset sales that allow you to select the asset, dates and values. You don't post a credit directly to the asset. So next question, when making a partial sale, how can you choose to calculate the amount of value reduction for the asset? So when making a partial sale, how can you choose to calculate the amount of value reduction for the asset? By quantity, by retirement amount and by percentage. So A, D and D, by posted depreciation and by profit and loss. We don't do how much we need to retire. We will decide based on the quantity, based on the retirement amount and by percentage. When you select a partial sale in the asset retirement pop-up, you can choose to sell a specific quantity of the asset if applicable. The value is adjusted based on the amount for sale or total amount fraction. When you select a retirement amount, you directly input the amount of value reduction as a number value. When you select a retirement amount, you directly input the amount of value reduction as a number value. The percentage method simply splits the value based on the percentage entered. You can't use the other options to determine the value. To post intercompany asset transfers, you maintain the cross-company code clearing accounts. False. An intercompany asset transfer works through a different mechanism than financial accounting cross-company postings and doesn't require separate cross-company account definitions. So when you post an amount to an asset in the low value asset class that is above the threshold for the maximum value, how does the system respond? It gives a warning message. It gives an error message. The system produces an error message if the amount value is more than the specified amount for LVA. When you try to post above the maximum value for an asset created in the LVA class, the system produces an error. You can only post up to the maximum amount for assets in this class. You can only post up to the maximum amount for assets. In this case, you would check if you can split the posting or more likely create the asset in a normal asset class. The other options have one thing in common. The system is making a lot of decisions and automations. As a rule, the default system keeps things simple. Too much automation runs into problems when dealing with processes and transactions that might be done very differently depending on the company. So here there are many options they have given, but the correct answer is it throws an error message. If you don't understand, please pause the video and you can read it once again. You have an invoice for transport expenses for your assets under construction. These expenses can be capitalized per IFRS but not in the local GAAP. What is the best way to handle this? So we have to capitalize per IFRS but not in the local GAAP. So what does we do? We post the invoice to the assets under construction and manage settlement per depreciation area. Post the invoice to a clearing account and clear it per ledger group. Capitalize for IS. Post the invoice to assets under construction and after settlement post a partial scrapping for the local depreciation area. Post the invoice twice, one as an expense to the local ledger group and one more to IFRS. Okay, there are different options. So how do you handle this situation? So it seems answer A is the best one because it uses the assets under construction functionality. So here for your assets under construction, the main thing we have to post the invoice under asset under construction functionality as it is intended to be used. You collect the production related expenses on a single item as you would use an internal order or a project, and then you settle the amounts. In SAP S4 HANA, the settlement is defined on the depreciation area. So you can manage the capitalization separately per accounting principle. In SAP S4 HANA, the settlement is defined on the depreciation area, so you can manage the capitalization separately per accounting principle. Questions with what is the best phrasing aren't part of the certification exam because they are ambiguous, and the questions and answers in the certification exam must be as straightforward as possible. The cross company code depreciation area is required in which of the following intercompany transfers? For all intercompany for transfers, for transfers with non-matching depreciation areas, for transfers between company codes in different countries, for transfers in which you also change the asset class. So it is for non-matching depreciation areas. The cross company code depreciation area is used exactly for cases in which the sender has areas that need to be mapped to the areas with different codification on the receiver side. You might need it for transfers that are between countries, but you also might not, because you might need it for the cases of changing the asset class. In questions such as this, you look for the answers that answer the question in all cases. An online test run for depreciation is limited to how many assets? 1000. This is pure knowledge question. You either know it or you don't. When these kinds of questions are in certification exams, the exam authors try to make them at least cover useful topics. In this case, this is useful knowledge but not essential. It's in 1000 assets. True or false? You can select to execute the depreciation posting run for a single depreciation area. True. Depreciation can be posted for a single depreciation area or a single accounting principle. For an example of why this might be used, you can close periods per ledger at different times, so this might be required in certain periods. With the depreciation run completing, even when assets have errors, you no longer would worry about fixing assets with errors. It is a wrong statement. If there are errors, the fact that you can maybe go about closing a period without having successfully posted to an asset doesn't mean that you shouldn't fix things as soon as possible. If you leave something problematic as is for too long, the fiscal year change program won't be able to close a previous fiscal year and you will be locked in without being able to post to the next fiscal year. When should fiscal year close for asset accounting be carried out? Directly before balance carry forward, directly after balance carry forward, when the previous fiscal year is closed, when the last non-special period of the previous year is closed. When should fiscal year close for asset accounting be carried out? So the SAP S/4HANA system allows for 2 open fiscal years for you to manage the closing postings of a fiscal year and start posting in the new fiscal year. You close a fiscal year when you close the books of previous year, and you are sure there will be no more posting to assets in the closed fiscal year. When should fiscal year close for asset accounting be carried out? When the previous fiscal year is closed. So with this, we completed all asset accounting specific questions. So thank you so much. I think at least this video will be helpful for few people. Thank you so much in watching this video. We'll meet again in another video. I think it should be financial cross topics or financial closing. Thank you so much.